It's a shorter trading week, so how do you play it? Joining me today is Peter Hug. For Pete's Sake is up next. Peter Hug joins me once again. Peter, thank you so much for being with me.
Nice to be here, Daniela.
So it's Thanksgiving tomorrow. Markets are closed tomorrow. What do we do here, Peter? What are you looking at this week?
Well, it's been a very thin week. I suggested last week to go long at 1678. That level held. And, the U.S. government looks like they may come to some agreement on the fiscal cliff, and I think that was enough to take the stock market up about 300 points over since the announcement on Friday, and I think that's been a trade for more risky assets, and that included the metals, and the metals went higher on that basis at first, and then with the Middle East issues that are going on now with the Gaza, it's price supportive. I don't think anybody wants to go home short ahead of Thanksgiving.
Do you think anything's been baked into the cake, Peter?
No, I don't think so. I think the Republicans and the Democrats are still going to have issues, and this is a headline news-driven market. I do believe we've seen the low in gold, and I do believe we've seen the low in silver in this cycle, and I do see the metals constructively working higher.
And the low in gold was?
The 1527 range in August, and silver down at the 2650 range.
Okay, so you did say last week 1678 was a good buying opportunity. A, did you take advantage of that? And B, what's your next plan of action?
Well, I'm still long gold from that trade. I'm still long my silver trade from 3120. I still see silver trying to test through 34, possibly 35 in the short term. I'd like to see gold break up through 1750 with the first target at 1778, and then I think we'll see 1820.
Peter, just on that note, I was at the San Francisco Hard Assets show last week, and one analyst was saying that the gold-silver ratio should just be thrown out the window, and we shouldn't be looking at gold's movement and then determining silver's movement. How do you play the silver market?
Well, I'm not sure what context he would have made that comment under. I think if gold goes to $1,900 an ounce, just to pick a number, I think silver would probably be approaching $42 an ounce. So if you look at it from a percentage point of view, silver I think is still a better buy than gold at these levels. Okay. If gold were to go to $1,900 and silver were to run to $50 or $60, I'd probably be heavier in gold and lighter in silver. But at these current levels, if you're bullish the market, I still like silver better than gold.
Okay, so let's go back to the U.S. a second. That really has been the sentiment that there seems to be optimism there. But wouldn't a stronger U.S. dollar put pressure on gold, Peter?
It may, but you still have to look at gold in a global context. I don't think Europe is anywhere near coming out of their situation. Fear is not an American thing. Fear is a global thing. And if the Europeans are scared, they're going to be buying gold. So the demand will come out of Europe. If you look recently, the U.S. dollar has actually strengthened against the euro, and it hasn't hurt the gold market. The gold market's actually higher than where it was when the euro was at 130.
Okay, but Peter, if you had to choose one indicator we should be paying attention to right now, what would it be?
I'd be looking at the stock market because I think if, the fear will manifest itself in the stock market, and if that market gets hammered, I think the gold trade is off in the short term because people will run to cash. They're going to sell what's liquid and what they may have some profits in, and that is still the metals complex, and the metals will come down. If the stock market goes up, it indicates to me that the economies are going to be recovering, and the Fed said even though the economies would be recovering, they'd still keep their foot to the pedal on printing more money, and I think that's price positive for the metals. The very last stage of a bull market in precious metals or in any commodity sector is the inflationary spike, and I think that's still 2 years away.
Okay, Peter, finally, as we're approaching year end, what are some numbers that you're looking at for gold? What are you sticking to?
I'm still looking at 1820-ish level by the end of the year for gold. I'm looking at silver 35 to 37 by the end of the year. And I think next year will be much more price constructive. I'm not suggesting we're not going to get pullbacks, but I do see new highs next year.
Peter, thank you so much, and happy Thanksgiving.
Happy Thanksgiving to all our American friends.
Yes, happy Thanksgiving to all. Thank you for watching this edition of For Pete's Sake. We'll be back next week. Thanks for watching. In the meantime, you can email me any comments or questions at newsfeedback@kitco.com or tweet me at Daniela Cambone. Thanks for watching.